My name is Dean Wright. I am a partner of Schindler's Attorneys, and I'm joined today by another co-founding member of the COBRA initiative, which is Business IQ. And more particularly, what we're going to be hearing today, this is the last of our webinars for the week. We're going to be hearing an economic wrap-up from the chief economist of Business IQ, Sofiso Skinjana, who's going to take us through the snapshot of the week, I think. And it's been quite an interesting one. I suppose some of the regulations we've been promised would be relaxed, but I suppose this also needs to be seen. So what I'm going to do is hand over to you, Sofiso. I'd love to hear your insights on this. And yeah, what are your thoughts? Where do you see us going?
Let me just make sure I'm on.
Yep, you're on. Can hear you.
Okay. Thanks, Dean. It's certainly been an interesting week from our side in terms of just looking at the state of the economy, some of the developments in the context of the week, and there's certainly, I think, a lot that's always available for us to discuss from an economics point of view. And I always love how times of crisis either make people become really, really good lawyers or really good economists, etc. And so I think I encourage everyone in the room to, put up their hand as a qualified economist. And primarily because, even the way we talk about policy making, that policy making ought to be iterative in nature. And therefore, you've got to leave sufficient room for learning, I think, in terms of one being able to hear people's thoughts. And I think a lot of people got good ideas around what we can do for the economy. And then you contextualize that, I think, within the foundations and the fundamentals of how that becomes, a policy framework. So given the fact that, as I said, there's so much that we can talk about in the context of what happened this week, I think there are three conversations that could be quite interesting for this week. It's, of course, the conversations around, how, the economy moving from a stage 4 to a stage 3, and partial, restrictions in the economy around certain provinces that may stay at stage 4, and that specifically then being Gauteng, Western Cape, and potentially Eastern Cape. And so that's one of the first discussions that we're just going to have and say, what are the implications of sustained levels of various stages of the lockdown? And then over and above that, there's, of course, then the burning question and the burning conversations around e-commerce. And we had heard initially from Minister Patel that they had put restrictions on e-commerce primarily because it was unfair. That's pretty much what they had said. And we've heard now, and it's been gazetted as of late last night, that all e-commerce will be allowed to operate. And so we'll reflect again on that and see how that contextualizes to the economic context. And then lastly, I think we're going to reflect on what we're seeing in a global context, and I'll zoom in the US in terms of the wave of liquidations that are coming in there, and how that might be an interesting litmus test for the South African context in terms of the wave of high-profile business rescue industries or corporations in South Africa now, starting to come out of the woodworks, in essence saying that as it stands, they just can't operate sustainably. And so I think those three points of discussion might be really good just to round up this particular week. There's always more that I think we can talk about, but given the space, we'd love to, I think, to engage back to the people in the room, as well as then the kind of making sure that it's tight, it's neat. And so let's just have a couple of headlines to discuss, and then let's kick through it. And so that's the basic view that we're going to have for this particular Friday. But as I said, every Friday we're certainly going to have this as an ongoing engagement platform. And as I said, all of the questions and comments that come in as we talk, we will certainly incorporate into all our thinking and as we iterate on a weekly basis. And so, as I said initially, I absolutely welcome everyone. And thank you for joining us, and absolutely invite you to be as knowledgeable as you can about the state of the economy, be as knowledgeable as you can about the questions we ought to be asking, primarily in the context of the economy. And hopefully all of those questions can go into some of the submissions that we also take to the policymakers and ensure that we are able to share, I think, in a prosperous economy as a broader country. So I guess then, as I said, we'll start looking at what the provincial or what the implication would be for locking up some of the provinces and keeping some of the provinces open. We know, for example, that Gauteng is attributable to about 34% of the country's GDP, and that's followed by KZN, I think, at about 17%, and we've got Western Cape with about 13 or 12. And so these are the three biggest economies, and I think, it's important to first then just take a macro view of that particular economy, and then to start to see at some of the sectors that are important economic drivers in those economies, and to see whether then a sustained level of a stage 4, then the kind of impact that may have on an economy, what that might mean. And one of the key sectors, for example, we know that Gauteng, has been growing into, as well as been good in terms of economic contributor, is vehicle manufacturing. We had seen just before the lockdown the launch of the Tshwane automotive hub, and we've got a lot of OEMs as well, in terms of, so those are suppliers into the automotive sector that are in the province. We understand that particular sector was on a hard lockdown at a stage 5 level, and now it's at a partial lockdown at a stage 4 level, particularly the retailing of automotives. South Africa, I think, is the third largest automotive exporter globally, and I think our automotive exports were attributable to about 156 billion to our GDP. And so that the context of closed borders then has got a material impact on the level of activity that we can see in terms of our export activity, but also given the restrictions that we had from the factory output as well as the factory economic activity in that particular sector, we would have seen that, I think, also drive activity to a grinding halt. And so these are some of the things that we ought to be thinking about when we talk about what might happen or what are the implications of a Gauteng remaining in a stage 4 lockdown alert level. One of the other sectors, of course, is mining. Mining across the country is attributable, I think, to 8% of GDP and only 3% of employment. And we know that sector to be largely a capital-intensive sector. And we've heard, of course, that open cast mining can go into 100% and 50% partial activity in the other portions of the mine. Again, I think a lot of the thinking that we've got to push back about is, for some of the sectors that already have, for example, particularly safety regulations embedded in the way that sector operates, in terms of PPE, for example, some of those sectors ought to be reconsidered in terms of how they get opened, because also some of the sectors, again, is that, there's got to be a smart way around how we think about the opening and not opening conversation for the economy. Primarily because there are some organizations or some types of companies, some types of industries that can't operate at a 50% level. And so if you've sunk a shaft, for example, you can't unsink 50% of that shaft. And so the thinking around, let's make mining operate 50% sometimes is counterintuitive in and of itself, because it can drive those businesses into, I guess, into a poor operational context, and those businesses would ultimately close. And so I think one of the thinking and one of the submissions we now have to bring back to the policymakers, particularly at the National Command Council, is thinking around, specifically around when we talk around which portions of the economy to open, maybe the question should be voiced the other way around, which portions of the economy shouldn't we open? And one of the examples we made, for example, with the cigarettes and alcohol, is that the thinking that often goes behind, even beyond the health and respiratory impacts of cigarettes, is that they tend to be social goods. And so when people smoke, they want to smoke together. When people drink, they want to drink together. And that goes counterintuitive or against the ideals of social distancing. And so even when you ask the questions around who should or who shouldn't, I think it's more important to probably to move towards a lens of who shouldn't. And so I contextualize the mining conversation primarily in the context of this 50% operation ideal that we are seeing at these levels, and that just might not work in terms of keeping those businesses from retrenching ultimately, and from cutting back on output, and ultimately, God forbid, closing. And so that's one of the things. Of course, the services sector in Gauteng is an important driver of economic growth. All our financial services are here. It's only, I think, asset management that's mostly broadly based in Cape Town. Outside of that, there's the IT, there's the professional services. And all of those, I think, have been able to partially operate at a stage 5 level. And so while the broader economic impact results in lower output coming out of these specific sectors, I think those sectors, again, remain key contributors to the economy. And so I think from a Gauteng point of view, it remains important that even if we're at a stage 4 level, we do have large contributors to that economic basket actually still being able to operate, albeit at a reduced capacity. When you go into the Western Cape context, it's quite an interesting one, because one, there's the energy and alternative energy quagmire that we now are faced with. The energy capacity in the economy is about 52,000 megawatt hours. That's the full capacity in the economy. 6,700 was attributable to alternative energy. What's interesting now is that we heard from Andre de Ruyter, Eskom CEO, is that they've decommissioned about 6,000 megawatts worth of electricity in terms of plant activity, primarily because the key consideration, of course, is where do you store that energy when you don't have economic activity, because the largest users in the economy is industry, and we often call them high-intensive energy users, and those users now are broadly economically inactive. And so again, the mines, some of the manufacturing firms, were pretty much limited from operating. And so there was excess supply, in essence, from an Eskom point of view. And so even though they had accelerated their plant maintenance program throughout March, but now they find themselves at a point where they can't sell the electricity. We don't have the technology that Elon Musk is working on, for example, which is battery cell technology that enables us to store energy at an effective cost price over long periods of time. And so I guess the prudent thing is to decommission some of those plants. And therefore, I think it's going to be quite interesting in terms of what that means also for the REAP program, which was the acceleration of the alternative energy investments, as well as then, their energy not having sufficient demand as the economy phases itself into full productive capacity over time. And so energy then, of course, we know of the wind capacity in the Western Cape. So interestingly, I think it's the Northern Cape, if not Northwest, I think it's the Northern Cape, that's got the largest capacity for an alternative energy, followed by the Eastern Cape, followed by the Western Cape. We know Port Elizabeth is called the Windy City. And so as you drive along the Garden Route, you see a lot of those wind farms coming out of there. And so the two largest, wind is the most dominant alternative energy form in the country, followed by solar. And so again, when you look at closing or partial closing Western Cape, you start to look at some of the economic contributors that will continue to be restricted in a current or stage 4 level. We know tourism is one of the biggest contributors from a Western Cape point of view, and that sector has pretty much come to a grinding halt. And so again, if one of those sectors, if you've got a sector that just by virtue of the kind of pandemic that's facing the economy can't open, and there's nothing, absolutely nothing we can do about tourism opening right now, is then how do you think smartly around enabling other pockets of that economy so that even at a stage 4 level, there's sufficient economic activity that is able to take place there. And I think it's quite an interesting one when you look at also the two, I guess, versions of the conversations. One is, economic participation at each of the provinces. So Gauteng's got higher than the national average unemployment rate. Gauteng's got 30.9% unemployment, but they've got a higher labor participation ratio. And so it talks to the net migration that we see. So people tend to move to Johannesburg more than all the other big cities. Gauteng specifically, if I can talk provinces, and I think Gauteng is expecting a net migration of about 1 million people over the next 2 years. And they're followed actually, I think, by KZN and one of the mining economies, I think it's the Northern Cape. And so that results, I guess, in people, one, still being keen to participate in the labor force, and therefore then that's the labor that informs the high labor participation rate. I think in Cape Town and Western Cape, the labor participation rate is about 67.8%. The unemployment, however, in Western Cape is 20 or 21%, which is quite interesting. If you look all the way to Eastern Cape, and again, I spoke about the automotive sector, Buffalo City municipality alone contributes about 33% of the GDP of the entire province. And what happens, not Buffalo City, sorry, it's Nelson Mandela Bay. And we know what's happening in Nelson Mandela Bay. It's broadly automotive through the Kucha, SEZ, and other manufacturing activity happening in that special economic zone there as well. And so, again, when you then bring that into context and you say, if the Eastern Cape stays shut, it means a good portion of the economy will come under increasing amount of strain. And so what does it mean? And I think the question around, lives versus livelihoods in the context of this challenge that we find ourselves is that it's not an either or. And so the call is certainly not for government to remove their foot off the pedal in terms of the work they've done to limit the spread of COVID-19, as well as limit the extent to which our health system gets stressed. But certainly it's then the question around how do you put your foot on the economic pedal? And so, keep your foot on both pedals. And so I think even in the economic context for the Eastern Cape, if one big metro is attributable to 30% of the GDP, and the largest contribution to that particular metro is manufacturing, is their ports, and specifically vehicle making, and then what can we do to ensure that the economic strain is not going to be as severe for that portion of the economy. The Eastern Cape unemployment rate is really, really, I think, dire. I think it's second worst in the country. The extended unemployment definition for the Eastern Cape, I think it's close to 1 in 2 people are unemployed. And the hard definition of unemployment in the Eastern Cape is 40%. And so again, when you contextualize that to the national average of 29.1, you can start to see how bad the level of I guess, unemployment is in that particular part of the country. And so how we think about, again, keeping our foot on the economic pedal is certainly got to be textured by the kind of economic drivers that we have in that particular province, as well as then what's available to us as a lever to be able to ensure economic prosperity. And so I think that starts to, give us a lens on the economic activity that's happening in certain parts of the economy, and specifically the ones that may remain at level 3, and the implications also given which sectors are able to operate at different levels of the alert levels. And so I think keeping Gauteng, Western Cape, and the Eastern Cape at level 4 is certainly prudent from a health system risk point of view, but we also have to think around then economically, what do we need to do to propel those economies to drive economic activity outside of the spaces that are unable to be economically active, like tourism, for example. And so I think for that part of the conversation, we can, I think, engage further, and we can have quite extensive conversation. But I'll park it there for now, and then I'll move on to the e-commerce conversation. I think the e-commerce conversation is a really, really interesting one, primarily because it takes, I guess, an important lens through one, a digitally intensifying economy, particularly accelerated by COVID-19, but also it talks to broad-based participation in the economy. So if I just start with the second part, which is the broad-based participation in the economy, we often talk about, how certain manufacturing capacity in the economy is kind of lost, and manufacturing used to contribute about 28% GDP in 1996, and it now contributes 13% to GDP. And so one of the things, and if you look at other, I guess, ratios, you see that our import intensity ratio has increased over time. And so import intensity talks to how much do we need to import just to sustain our domestic demand. And you have seen that increasing over time. And then the question is, how do we solve the manufacturing challenge in the economy? We know South Africa started deindustrializing year 2000. And so there are a number of things that speak to the industrial gap that we find ourselves in, and therefore the manufacturing challenge. I'll make a specific example where textiles. South Africa is one of those economies in a global context that never allowed itself to build capacity in a textiles context. The textiles industry in the apartheid era was largely government subsidized. Over and above that, they used protectionism to keep imports coming into the economy. Our tariffs were up to about 70% at some point. The implication was that when we became signatories to the World Trade Organization in 1991, we were given 5 years, 6 years to transition into lowering those tariffs all the way down to 20%. As soon as those tariffs got lowered down, if you look at what happened to our import intensity in 1997 going forward, it went through the roof. Imports just from China went up by 3,000% over a period of 2.5 years. And so the challenge then is that when we talk industry, we've got to talk industry also in the context of comparative advantage. We lost in the textiles industry context the comparative advantage to compete globally, and that's it. And so the economic, the cost of doing textiles in the country was way more than actually importing it. And so now we're finding again the opportunity to insource our manufacturing capacity, particularly from a textiles point of view. We had the 1 million mask challenge, and everyone's making masks, either through a backyard setup, etc. But the important thing is that people are doing things and are economically active. I think how we ought to think about that around then, while the global economy is closed, what does it mean for us to invest in the right level of scale that will enable us to have a comparative advantage in a textiles context? South Africa, the nature of our consumption trend in textiles is that we're largely differentiators, and so we don't have large scale kind of manufacturers, particularly from a textile point of view, and even the way we consume, we buy here and we buy there, and we buy from different retailers. And so maybe then it's the opportunity from a government point of view is to invest and think about how do we bring the manufacturing and textiles capacity under one big industrial park. That way you're able to get economies of scale that ensure that, one, you can have broad-based participation in the economy, as well as you can have the comparative advantage that disincentivizes the importation of textiles in the economy. So the textile story is important because they were one of the sectors that were particularly limited in terms of their participation in online retail. And the thinking when they said it's unfair is that a lot of the smaller textile players don't have access to those supply chains. And they don't have preferential rates to negotiate delivery of their goods. They don't have established e-commerce retailing platforms. And so again, the pushback and the thinking and the smart thinking around that is don't discourage it, rather legislate a broad-based participation and say, if you are an online retailer that's had an existing presence for however many years and you've got really good technology to be able to manage the supply chain, at a minimum, you must have X amount that is locally produced, and therefore that means that there's broad-based participation in the economy. And so that way, you both enjoy inclusive growth, but as well as enjoy economic participation in the sector that you otherwise chose to exclude, primarily because of how particularly crises tend to accelerate the incidence of inequality. And so I think that's the thinking around why initially that put limitations on the operation of certain textiles. And now, fortunately, we celebrate the fact that all textiles, and at least all online and e-commerce can now take place, irrespective of whether or not it's for slops and golf t-shirts and anything else that's not deemed to be winter clothing. So I think, again, when we look at the challenge itself, it's often quite easy to look at it on surface and say, government is preventing economic activity from happening, but there's a lot of things that also have to be solved from a social point of view because of the fact that South Africa is the most unequal economy in the world right now. We've got 55% poverty rates in the economy, and that means that on average 55% of our economy live below 581 rand per month. And so you've got to think about those things also when you're doing all your economic planning, and how certain choices can exacerbate an already bad situation. And as I said, now we certainly welcome and appreciate the fact that all e-commerce will now operate at 100%. And I think it's going to really build an interesting story for e-commerce in South Africa. E-commerce in South Africa certainly hadn't picked up as well as it had on even other parts of the continent, specifically Kenya and Nigeria. And I think of all online sales, of online transaction, I think e-commerce in South Africa used to be attributable for between 7 and 9%, and everything else was cash send and airtime and electricity purchases and all of that stuff. And so it's going to be quite interesting to see how this crisis, accelerates e-commerce, but also the comfort of buying online and your relative sense of safety around your funds moving between places and knowing that you're going to get the right quality of good that you're going to need. And so I think it's going to be quite interesting to see what at what level it plateaus in terms of then that number being the sustainable e-commerce participation in all online transactions. And so that then closes that part of the conversation. And then, of course, the last part of the conversation that's also quite interesting is some of the big ticket companies, filing for business rescue. We've seen ComAir. I think it's a 7-year-old business, or they had positive earnings for 70 years running. And they looked at their balance sheet, they looked at the revenue model, and they knew that as things stand, they won't be able to operate sustainably. Often business rescue is looked at, and I think businesses also erroneously approach the idea of business rescue only when they are completely against the wall, in terms of their backs against the wall. And by then, often it's hard to salvage because they're too far gone. I think the going statistic in South Africa was that only 10% of businesses that went into business rescue came out of business rescue. And I think it's almost like trying to see business rescue as the psychologists of the economy. That, don't wait until you are suicidal before you go see a therapist. Give yourself time and space to have other specialists look at the business model you're operating within and help you pivot and adjust to a changing economic reality for your particular business. And so I think when we look at the difference between ComAir and SAA and their business rescue context, is very different. Right? The one business waited until everything was falling apart, and then they threw their hands in the air and said, we can't operate anymore, we need business rescue. And the other business said, when we look into the foreseeable future, we will not be able to operate. and therefore help us rearrange our operating structure, our capital structure, for us to be sustainable business post, I guess, the challenge that they're facing economically. And we've seen, of course, EdCon also come into that particular process. And I think EdCon's got about 25,000 permanent employees or temporary employees, I'm not sure which is the difference, and 10,000 perm or temp. I think it's 25. I think the 25 is permanent, and the other 10,000 is temporary. And that already is talking to you about a potential, if that business doesn't come back, 30,000 people or 35,000 people that won't get back into the labor force, at least, or they'll become unemployed, whether it becomes temporary unemployment or full-time unemployed. But I think that economic reality is really stark for the economy. And so, when we see then what's happening in the US and the pace at which businesses are filing for business rescue, are seeing now that they're expecting that 165 high-profile and massive companies probably going to file for liquidation in the US or bankruptcy. And that's quite stark. And you might think 165 is not that big. But if I tell you this in the South African context, in that 57% of our tax bill in the last tax collection period was collected from 380 companies in South Africa. 57 of our tax revenue, corporate income tax revenue, came from 380 companies. And there are more than 3.2 million companies registered at CIPC. There were 814,000 companies that were assessed for tax, and there were 214,000 companies that actually paid tax. And out of 214,000, 380 companies paid for 57% of the corporate income tax rate. And so it talks to one, the kind of earnings concentration from a tax point of view that we've got as an economy, and that actually then builds on the size of the risk a lot more, because it means you've got systemic risk into the system that you just can't afford to have large corporates collapsing, particularly in a South African context. And so I think even when we think about some of these high-profile businesses, starting to file for business rescue, I think we ought to look at that as a positive development in the context of our economy, that those companies are actually trying to remain sustainable, and that they're trying to at least find ways in which they find the right kind of support to be able to come back out of that into a sustainable growth reality for them. And so I think, for this particular week, I think that's will certainly be the end of the discussion points. And at this point in time, I think, Dean, you can certainly then engage us back into whether or not there are questions that the people in the room would like to engage us on, and we certainly then can have the last couple of minutes just having a Q&A and some responses. Okay, first question that's come up is, why do you think they haven't opened up exercise? So I think we heard now that there are in consultations around extending, I guess, the times for us to be able to exercise. And broadly, the thinking was that exercise results in people congregating in large groups, whether it's inside a gymnasium or like we saw on the promenade in Cape Town. And maybe some have argued then that, when you've got a wider window, then you have a lower probability of people congregating in those numbers. But again, I think then that starts to then defeat the whole thing of social distancing, in the sense that if the economy is open for longer just for people to roam around, in inverted commas, and then you're no longer enforcing the social distancing imperatives that you had wished to enforce. And so I think the question is really about balance, and say, what is the right way to balance? What's the right balance to find in terms of keeping the social distancing imperatives in check while ensuring that people's vitality, and so whether it's a health vitality and economic vitality and mental and spiritual, can be in check as well. And so it's certainly, we heard that the word unprecedented is one of the most abused words in this context, but it truly is an unprecedented context that we live in. And so I think even the choices, the policy choices will certainly be unprecedented. And so I think even from my side, it would certainly be an urge for patience with, government, particularly because I think that one specifically is really aimed at preserving lives and lives first before it's more livelihoods imperative. So the second question that's come is, does having a mixed level lockdown make any sense, particularly where the areas of highest infection are also the most economically active? Aren't we just prolonging the economic pain? Well, I've got a philosophical response to that, as well as, I'd say, a more grounded response. And the grounded response there is that, as I said, that the thinking has got to be not so much in a binary context or in a binary way, that it's either lives or livelihoods. And so a lot of the questions around now economy seems to be coming saying, well, that which you would give up would be the lives question in favor of the livelihoods question. And so I've tended to find a lot of the narratives coming and say, open up so that economy can be active. And so it starts to, I think, forget why we closed up to begin with. And so my thinking is that, as I said earlier, is that on the one side, you can keep your foot on the health pedal, but also now start to accelerate on the economic pedal. And government and policymakers, as well as business actually, and I've written out on a number of publications talking about how this is an opportunity for true social compacting to shape the economy going forward. We've seen the potential for government and private sector to work together in the context of this pandemic to improve the economic outcomes of all South Africans. And so the question is around, what does it mean to build capacity in a constrained economy? And so that question doesn't talk about whether or not you should expose lives, but rather it's proactive in thinking around building capacity. And so in the discussions we've had before, for example, in one of the articles I released, I made the example that given the fact that beer is not allowed to be sold, but we know that beer's got a short shelf life, and so it's either going to be thrown away or, well, it's going to be thrown away if we don't get to a level where it's able to be sold. Why don't we partner with some of the largest bread makers? They open up some capacity, for example, in community. And so I'm talking in Soweto, in Tembisa, in Tanzania, Khayelitsha, Gugulethu. They open up capacity for bread making to happen there, and then they would offtake the beer from the local taverns and beer sellers, and that could be converted into beer bread, for example. That one, what it does, it creates an economy for something that would otherwise not be economically active, which is beer sale. Two, it creates manufacturing capacity in an economy that would otherwise not have that manufacturing capacity. Three, it deals with some of the spatial problems that we found on the back of apartheid. A lot of the people who live in Soweto take 3 taxis to get to work. And then you still expect them to be highly productive when they get there, when they left their homes at 3 in the morning. And so all of a sudden you move economic activity, for example, closer to the spaces where people live, and then you can start getting the economic gains that you need to get out of that. And so again, all of that is said nothing about the lives question, right? It's spoken specifically around building capacity into the context of the economy. And so those are, I think, for me, the kind of thinking that I would certainly challenge from everyone who's reflecting on, I guess, this challenge that everyone is facing around the economic decline that could ultimately result in economic collapse, and say, well, we won't have an economy to build if we don't have people. But we won't have, but if there's no economy left, and then what do the people build? And so I think the question certainly must move away from it being a binary question, but allowing a more complex reflection of the question in terms of looking at one as an opportunity to build capacity, and the other one, which is the lives question around what does it mean for us to continue building resilience in the health system of the economy. The next question says, which sectors of the market do you foresee potentially becoming redundant? Quite an interesting one. I think I think redundant is probably a little bit aggressive as a word for now, just primarily because of the structure of our economy. And so we've often spoken about this idea of, the fourth industrial revolution and automation and all of those things and digital intensity, and how those contextualize into a more capital intensive economy, I guess, or a less labor intensive economy. The structure of our economy from a skills point of view doesn't lend itself to an acceleration into that kind of space. And so I often say that South Africa skipped a growth phase. And so often economies start from being agrarian, and then they become kind of industrialized and manufacturing-driven economies, and then lastly, they become services-led economies. We've got services now being some of the largest contributors into the economy. Financial services, business services, real estate contributes, I think, 15% of the labor, 15.6% of our labor force, and they contribute about 21% of our GDP, right? And that sector, for example, that largely lends itself to largely more skilled labor. Yet 3/4 of our labor force, 76% to be exact, is largely unskilled or semi-skilled. And then you also look at the labor force who's unemployed, and 91% of that labor force either has a matric or less. And so the call has always been that let's create an economy not for the jobs we wish we had, but let's create jobs for the economy we currently have, the labor force we currently have first. And so that labor force that we currently have first, I think, then requires a certain structure of the economy that can absorb that kind of a labor force. And so future-proofing the economy starts by first absorbing trying to get to full employment. And so I think while there are certain sectors that are at more risk of certain roles becoming redundant, we've seen in banking, for example, how the shape of the branch has changed. But people will tell you that they still need some face-to-face engagement with their financial managers in one way or another. And so you're seeing the face of the branch, for example, morph into different things over time. We are seeing a lot more, for example, technology-driven engagements on customer services. And so call centers are certainly, the shape of the call center is going to change. I'm not quite sure it's going to become necessarily less employment dense or labor intense, but I think the shape of it is going to change for sure. So whether or not the responses become automated, or they're AI driven, or there's someone living behind the computer and then they're responding to 15 different people at the same time, I think the shape of that particular industry is certainly going to change materially. We've seen how agriculture and agricultural monitoring has changed. So we're using a lot more drones to assess weather patterns, to assess issues of pesticide control and all of those things. And so that portion of agriculture that often needed people to go walk the field on a daily basis to look at the plant activity that's taking place, for them to go do those daily logs, is certainly changing drastically. And so again, we're seeing a lot more digital intensity coming into that space. And so I think a lot of the sectors have got versions or pockets of those sectors that are going to be impacted by a digitally intensifying economy. But as I said, is that I don't think that will happen fast enough such that certain sectors will cease to exist almost completely. The next question says, international markets, How closely do you think the markets correlate to the real economy? And with 25% of employees seeking unemployment benefits, I'm assuming, in the US, but the stock market seemingly recovering from the initial crash, it would appear that there's a huge gap between what's happening in the markets as well as the real world. Any thoughts of this? It's a good question. And it's actually a really interesting question, even for a South African context. In South Africa, I think it's about 65% of portfolio flows that come into the economy are short-term flows. And so those flows don't go into the real economy, and therefore they can't be deemed as FDI really. They're just portfolio flows. And so those are investors who are seeking the interest rate differential between their home markets and South Africa. We've heard historically that the South African bond yields are some of the highest in the world. And therefore, investors who've got borrowing rates of 0% and investing at 7% in South Africa, they can get really good return. And so those portfolio flows then tend to stay in the economy for short periods of time, short term, 18 months to 2 years max. And also that in and of itself create volatility for actually what happens in the real economy, because as soon as your currency becomes volatile, it's hard for you to hedge your export values and all of that stuff. And so while we're trying to have an export-led economy, we've got flows happening on the other side that is, working counterintuitive to that. And so the quick answer is that financial flows don't necessarily equate to what's happening in the real economy, but are often reflective of what investors think is happening in the real economy. Because those companies that are trading on the stock exchanges operate in the real economy. And so if you think food retailers are not going to suffer as bad on the back of COVID-19 because they've been able to sell food, etc., and actually they might accelerate because now they've been forced to build their technology platforms, etc., etc., and then you might see an interest towards those kind of shares. And so the point I'm making is that often the sentiment is often reflective of what the perception of the economic activity on the ground looks like. But the pace at which those changes will never be the same pace at which it happens in the real economy. And so you can have a 10% growth in your stock market over a day, but the 10% growth in a company over a day, you just won't see. And so that's the kind of, I think, context we ought to look at, I guess, financial markets versus the real economy. And in context, and then bring that also into, the South African context and some of the calls for capital controls. The thinking is that if, for example, you incentivize that the money that comes into the South African economy actually does go into the real economy, and then we're going to see the real growth coming in. Our top firms in the economy have either come under a lot of, backlash in terms of the monies that they were sitting on top of in terms of cash balances. We heard the number was about 1.2, 1.3 trillion of the top companies sitting in cash balances. But their response was also that they don't see the economic value on the ground, or there's policy uncertainty, or a lot of the other things that they cited as the reason that they're sitting on those cash balances. And so I think you've got to work within a smart context that one does disincentivize businesses from behaving in a way that's not in the right spirit of the economy, but at the same time to create a conducive environment for business to take place. And so I think those are some of the things that come into some of the disparities and the gaps that we see between what happens in financial markets and what actually happens in the real economy. And I think that was the last question, and it's right on time. We are at 15:59. I would certainly like to thank everyone for coming. Again, I think, the view and the thinking is that we start to use this to contextualize, what's happening in the economy and its impact on the businesses that we are, through this COBRA initiative, trying to, ensure that they remain sustainable and viable in the long term, as well as, I think, of all of us becoming and remaining, I think, active economic participants for the country. And so all of this stuff is certainly relevant. And as I said, I think the questions that we ask and the engagement levels that we seek here will certainly also inform the kind of contributions I'm able to give back to some of the policymakers, for example, and some of the thinking that might be important in ensuring a mutually prosperous economy for everyone who lives in it. Dean, are you back?
Hi, Sophie. So I'm standing in for Dean. He just had to run into a meeting. I do have one more question for you, if you don't mind. So everyone is asking in general, where do we foresee, the economy in the future? And that's why I posed the question in terms of which industries potentially could be made redundant. And we definitely want to give hope to businesses that are small and big. And what insight do you have for the public in terms of what they could maybe invent of what they originally have, be it a coffee shop or, repurpose their office spaces? I think that we definitely have a light at the end of the tunnel through all of this, despite all the turmoil that people are seeing and or going through. But creating hope and just giving insight into that would be very beneficial, if you don't mind.
No, absolutely, Tasneem. I mean, I think one of the things that I've tended to in any case advocate for, and my favorite line came from the Microsoft CEO, not Microsoft, Nokia ex-CEO. And he said, we didn't do anything wrong and we still failed, right? And we still lost, that's the word he used. And I think the lesson there is that markets are always going to be changing, and to always explore the immediate environment around opportunities to pivot, as well as opportunities to diversify their earnings base. Earnings is always one of the burning platforms for any business. And we now would challenge, I think, business owners in general to always look at ways in which they diversify their earnings base. One of the examples I once made was that sometimes we take for granted the resources that are immediately available to us. And the example I made is that we know, for example, we know every day there are hawkers on the street who sell fruit, bananas, apples, etc. And this was certainly in the pre-COVID economy. And we know also that a banana, particularly that's been exposed to the sun and all the elements, would certainly go ripe much quicker. And so maybe after 2 days, the bananas that those hawkers were selling would certainly not be viable to be sold on that particular food stand on the third day. If, for example, we or government or private sector, whoever, looks at that and says, actually, there are ripe bananas that are coming into the market every day. How do we then, for example, offer these people, maybe ordinarily they would have thrown the banana away because they don't have a market for ripe banana. And instead of them selling one banana for 3 Rand, a ripe banana, they might sell it to you for 1 Rand, and then you use that to make banana cakes. Before you know it, we literally could be one of the best banana cake makers in the world, primarily because now you keep investing in an economy that one didn't exist, but now you want to get better at what you're doing. And so we know ripe banana is used for banana cake because of its sugar content. And so I just talk about this example as a really, really good example around how sometimes the gems are right in front of us. And we don't spend enough time looking for those gems. And so it becomes hard to know which way to pivot as a business if you don't ask those questions. And so I think the process of discovery for a business has got to be an ongoing process. Businesses have also got to challenge themselves to be learning businesses. And so the more you allow yourself to be challenged on learning, the better you get in terms of seeing the opportunities to pivot. And so I certainly think that there are a lot more businesses that have an opportunity to pivot that they might not have explored yet. I always made the example, again, around that there's nothing that's not connected in this world. And this is more of a philosophical view, but it works in the context of what we're talking about. And say maybe, you were passionate about engineering and you became a cement manufacturer, and then but your kind of after hours dream is around jewelry making. If you spend enough time trying to connect those two, you might realize that you can make pendants out of cement. And so these are some of the things, or table artifacts, etc. And so you're moving into now some architectural interior design type of space because you actually allowed yourself to ask the question around what has cement making got to do with jewelry? But until we allow ourselves to ask those questions, we won't see the opportunity for that pivot to take place. And so I think my challenge to businesses is certainly around learning to be learning businesses, as well as always scouting your immediate environment to see if there are opportunities for you to tap into those resources to ensure your own viability and sustainability as a business.
That's amazing. Thank you, Sifiso. If everyone doesn't have anything else to say, I think we can definitely wrap it up and take it from there. And hopefully we can have more insights and some good news as of next week.
Absolutely.
Thank you, Sifiso. Thank you, everybody. I hope that everybody takes care and you have a good weekend.